All right, gang, good afternoon. I hope you enjoyed your weekend. Let's go ahead and jump right into this so that you can finish enjoying the weekend. Not take up too much time here. Got four stocks on watch here that we're looking at going into this week. So the first one that I'm looking at is actually going to be Apple. Apple has been ripping up with the market lately, especially with the last couple of weeks. We've been just trending up. The last 2 days, last week, we did pull back a little bit, and it is holding that 8 EMA. So while it still has this good momentum and it's holding strong here, if it opens above it tomorrow, I'd be looking to take this one long, break out of this 180 spot for a return back to its highs. Now, unfortunately, with Apple, it does not have a defined risk option. It's just too cheap. Let me show you. If you go in all the way out to May, you can see that a 30 Delta $5 wide play is only $1.05 in credit. So there's not a lot of premium for a defined risk. So what I'm looking at is an undefined one. And I'm looking right around 150, 155s. Okay, 155 will keep you below, well, so will 150, will keep you below the 200-day moving average. And for me, it makes it a little bit easier with the buying power to the credit. I like to be at least 10%. And if you look here, it's only $130 to $1,500 in buying power, but the pop might make it worth it at 91%. But I'm looking here at a 16 Delta 155 put. Anything from probably $1.80 and above will work. The buying power will be only $1,500. You're still going to get a great 86% probability on this play. Okay. Now the next one I'm looking at is another long play, and that is IWM. Now IWM has been running up fairly decent as well. Okay, and it did pull back again, much like most did last week, but it's also holding its 8 EMA and still has some good upward momentum. So again, if it opens above the 8 EMA, I'm looking to take this one long with a defined risk play. It will be slightly cheap. Okay, I'm looking to be way down here past multiple levels of support, but not a lot of credit. So even all the way out in May, right? I'm looking at selling the 200s, buying the 195 puts, right? I would like to get a buck 25. This ETF has always been pretty cheap. So we'll see how this one plays out. You know, if I like it, I'll set it at 125, but if it doesn't ever fill, I'm not going to chase it down. But it does give a good 66% probability. All right, $1.25, and of course you are default. Next one I'm looking at is going to be LNG. Okay, this has been really strong to the upside. Okay, not really correlated too much with the market. It did have a down day on Friday, but for the most part, this thing has been just trending up. And here we are again with upward momentum coming in, holding that 8 EMA, looking for it to break out here and make a return back to those highs, possibly seeing 50. This one has both an undefined, okay, down at multiple levels of support, and then of course it also has a defined version, which is right below that 21 moving average, which is perfect for me. So this one, okay, LNG, going to be out in May as well here, and you can sell the 120s, okay, 88 pop. Anything from $1.40 and above is perfectly fine with me, and it's only going to cost $1,200 to do that. Now, if what you need to do to the fine one, you're going to head up to the 135s, buy those 130s behind it. You're going to get about a 65% probability, which is really nice. Anywhere from a buck 50 to a buck 60 will work. You can see that the spreads are a little wide. Okay, so I would try the mid price, and if it doesn't fill, I am cool with a buck 50 on this one. And again, it's defined risk, so you limit the cost there. Okay, and the last one is going to be Thor Industries. That's THO, and this one has been in a nice downtrend for a while here. It's still got momentum. It's got a great looking squeeze. It's trending perfect here. It is a little low, so ideally I'd like to see it up a little bit more towards that 8 EMA or even the 21. Okay, but if that's the case, the strikes will change. As you can see, there is a lot of momentum. So I'm looking at or right, THO. This is also May. Now I'm looking at the 85s and the 90s. So it's a little high, but it is above the 21 moving average, so I'm okay with that. Now the credit is also low, and that's just because of the skew. There's not a lot of credit on the call side typically here. So I'm willing to take call side plays for a dollar or above, and just play them out. So as you can see though, this does still give a good 95% probability of profit. So that's fantastic. Okay, and I'm looking at selling the 85s, buying those 90s, ideally a dollar, $1.10. Now, if it starts to run up tomorrow, I would probably wait because you might be able to get the 90 95s and look for it to bounce off that 8 or 21. For now, we're going to try to get these 85 90s. Okay, spreads are a little wide. There is a very little liquidity into this one. So I would not chase this either, but if you can get a fill right around mid price, plus or minus a few pennies, then great. Right, and again, of course, it's defined risk, so you're all good there. And that's going to be it for you, gang. Enjoy the rest of your weekend. Keep an eye out in your email. There is an announcement coming out in probably 2 weeks or so. Okay, so if you're not subscribed, Facebook, YouTube, go head over to sci-fi trading.com, scroll all the way down, get your information in there. You don't want to miss out. Anyways, take care. Have a great rest of your afternoon.